There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
My name is Steve Vetterl. I am on the mic Saturday morning for a very brief time. Don't hate it. Don't be upset. Let your heart not be troubled. I highly suggest the time that you do not spend listening to me drone on about macro issues you can use for your benefit to go back and listen to some of the previous Saturday's chats, a fireside chat, or in this case, a rainy day in Florida side chat. I try to do these calls every Saturday morning, just a little bit after 10 a.m. and Tuesday at 1 p.m. as your risk manager for Auvoria Prime, which has a ever expanding and quite large building love of subscribers and products. So after the shameless ploy, I will move on. ForexFactory.com is always the best place to go for anything related to news stories, central bankers talking out their ass, you name it, right? So two schools of thought on this Saturday morning. One, I think we've probably seen a massive capitulation run in equities. So for those just on an equity run, I think, remember, Steve could always be wrong. Oftentimes I am. What would you do if I was, right? I'm going to show this actually to you guys on a chart, why a late to the game short is almost always a face ripper. So I'll note that for you on the chart, but let's just take a quick peek at the week, next week, 22nd to 28th. Do note, just looking at the calendar for planning purposes, as we roll into the end of May, I am not going to be available to do a broadcast next Saturday. No, that's not correct. I'm not available to do a broadcast on the 4th of June. We will be traveling throughout the Florida Keys for vacation. Kids are out of school. It is time for a trip down to the Keys. They haven't seen it. Anyway, but I will be broadcasting the 20th, which is next Saturday. Do note that for those not U.S. residents, this is a big holiday weekend here, next weekend through the 30th. So for Memorial Day weekend, it's usually the start of the summer. I say this not to tease the overseas and not be having a holiday, but more to just understand that volumes start to slow off. So volumes could be much lighter this summer than in the past. Why is that? Because the simple fact that literally everybody I know, whether they have money or not, they're planning some kind of trip and they're going to different places. Many of them are actually driving, camping, hiking, all that fun stuff. So with lower volumes in any broadly diversified and or liquid market, could bring more volatility to movements. So just keep that in mind as you walk through next few months. So looks like we got a holiday in Canada. Everybody can go dig for gold now. And we got flash PMI, Fed Chair Powell Tuesday. Let's see what this is. Reorganized National Center for American Indians. Yeah, so this shouldn't be like any sort of earth-shattering speaking engagement. FOMC meeting minutes. This looks to me, yeah, this will be the big story of the week. So keep in mind, 2 p.m. Eastern time is what you're seeing as far as my calendar. You can calibrate it to your time zone, but this is the minutes. Just remember this. A lot can be learned from Forex just by taking a look at, not necessarily diving too much into all these meetings, but just looking at how it can affect currencies. I can tell you this hasn't always been the best for currencies, because you would think that, but this is just a broad statement. Don't take this as any sort of Bible or scripture. Let's take a look at this, as inflation is taking front and center stage. All right, so just note these different news stories. I'm not going to get too far into it. Let's take a look at the broad market. So we're going to start off with a quick lesson. We'll go through some of these charts and I'll wrap it up. You're looking at a 5-minute chart of the S&P. So why you always want to, as you can see, I'm not a big fan for drawing on charts. So if you could just follow the crosshairs, you can see that I'm sort of outlining where the market traded sideways. This is a 5-minute chart. I'm not reading anything into this other than explaining to you guys a typical chart pattern that many fail to see. Once we broke lower, okay, we had a couple of slingshots that formed. So your first break out of an area, your first pullback, and this could be on a currency, commodity, individual equity, in any kind of chart pattern, typically the first break of an area where you spent some time, right, of some time can certainly play in. Some are like, well, it's only a 5-minute chart, so it's not that big. The point is that it broke from this area and it came back up. It's usually your first shot to get on the bus, right? Get on the train lower, right? Trading with the trend, as they say. The later that you get into a period, and especially after an exceptionally volatile few weeks in both the futures markets relating to indexes as well as the indexes themselves, you run the risk of, especially on a Friday afternoon, which is the window we're looking at here from 2 p.m.-ish, actually like 2:30-ish, all the way to when the market closes just before the top of the hour at 4. Okay, let's take a look. So came down, hit huge reversal, slightly higher volume. Doesn't look like it's anything out of and then the volume has really come in crazy high. Came down, formed a support. This was essentially, arguably right here, but this was essentially your last time to short this market. Well, very easy to see that, obviously, but a lot of things were beginning to get sort of much lower, and as soon as you break it higher, you have a lot of people say, well, you could take a couple of shots on a slingshot. And keep in mind, this I just find personally, there's really no rhyme or reason to be better illustrated on a short downtrending market than up. Okay, but you can reverse this for an uptrending market. Point, you always want to take your first couple of stabs on the break of a trend. Once you get into stab 3 and 4, it gets really dangerous. And forget about the pattern as a whole. Just understand statistically, if you're going to try and reverse, take a hit off of some kind of bottom or bottoming or some major type of reversal, you want to be riding the train to where it's going to go, right? Those that we're riding this down, and this is just obviously a very small time frame chart, but I think it illustrates the point. You just don't want to get into taking stabs at these shorts on many times back up, because look what happened. And vol came in huge to support that. This, to me, right here, looks like the finishing of capitulation. Okay. So it'd be interesting to see what we open up like on Monday morning. I've been taking a closer look, obviously, at the S&P 500 futures, because it is, for lack of a time this morning to give you 50 zillion reasons, it's just the market I prefer to trade if I'm a trader. So it's also one of the more dangerous markets, but it operates exceptionally well on patterns and flows of volume based on market profile than pretty much any other market out there, including the NQs, which is the NASDAQ. So know that we had a huge lift off the bottom, and it was followed by big vol. This is not something that I'd be shorting against, right? You had some hints right here, tightening up Bollinger Bands, a whole bunch of other stuff, moving average lines coming down that, we're going to maybe, but you also, from the perspective of the market as a whole, you had, here we go, a market that is also ridiculously oversold. So, but real close to 1,000-point drop on the S&P, right? It's a little more than 20%. And, arguably with dividends reinvested and all that, you could sort of argue, how much decline there is. And I don't really care about that. I just generally want to note that when you come into oversold conditions with two shots to reverse and a doji, it's like a spinning one actually, and then you come off of the bottom, this is a rejection reverse, right? Just like you saw, not as powerful here. It's more like just a reversal, but this is a more powerful rejection reverse. Typically, when you see that type, you're going to get at least a couple of days of up. See that candle here, almost as a duplicate of this one there, if you could see this. So not necessarily about what markets. I know that this probably should be more of a currency-based discussion, but ideally the risk in any trade can be illustrated on all different types of charts. So my goal always as a advisor, look at me as your financial advisor, money manager, risk guy, whatever you wish, is to give you a complete education, or at least as complete as you wish, on all asset classes. That's why I talk about them all. I may joke about art and classic cars, but it's to illustrate a point on the different asset classes. So that is a peek at the S&P. Let's go to the dollar. This one is best illustrated on a monthly chart. So we're looking at a long period of time, and this was it. This was where anybody short this currency over any period of time, as any size of institution or any size of trade that has been short, has felt tremendous pain. And this will get even the biggest and most stubborn institutions to move when this type of move takes place. If everybody has sold the dollar, we're just thinking theoretically here, right? If everybody has sold the dollar, are there any buyers left? Arguably some can come in, right? But for the purposes of just charting, the buyers have, I should say the folks short, have additional fervor, because now we've have our first week. Actually, this is a monthly candle. Month's not over yet, right? We've got approximately 8-9 days here left in the month. I just forget, this may go to the 31st. Anyway, the doji that we see here. Jump back to weekly. So Steve, where is this going to go? I think honestly we've got a fair amount of backing and filling to do, which essentially just is nothing more than a sideways trade. But on a grander scale, we may have seen the top in this for a while, depending on how that particular candle plays out. Let's take a look at the euro. Again, we have to really be on weekly, monthly charts. It's really, really large time frame stuff because it tells the whole story of what's going on. Resistance now is right in this area, right where that huge candle just severed through it. So 1.07-ish area right here. Up against this, I'll probably be a seller of this. The more time we take to get to this area, the longer the potential as we blast through it, move higher, dollar moves down. But any quick bursts into this area over the next week, and obviously this is a big move from where we currently are, which we've already seen some big moves, potentially is a shorting on that chart. Same thing, dollar pulls back, weekly chart, British pound. It's been inordinately weak. This is big resistance right here, 1.3025-ish area. Still stuck in the zone. You can see where the resistance is. It's been solid resistance for some time. Keep in mind these are weekly candles, not daily. Let's take a look at GBP CAD. Riding the ball, not normal stuff, right? Reversion back to the mean, typical of oversold or overbought. Remember, the chart could be flipped upside down, be the same thing. You're just reversing your reading. Gold still stuck in a long base. A lot thought it would break out, including myself. I have been wrong. Spot gold market here. Weekly charts. Let's get past oil because this makes us all sick. I paid $80 to fill up my car. I know those of you in other countries will be like, haha, that's nothing. That's why we drive 1-cylinder and 2-cylinder cars. I get it. It is a big deal for us in the States here, though. I have California pricing where I used to move from. I used to say I used to live and move from. And in Florida, now we have California price typically is $2.50 to $3 a gallon. Much, much higher. Let's take a look at the coinage. One piece of note that I did catch that I thought was a wise advice to the Twitter folk in the FinTwit area was that Bitcoin has been significantly less weak than the NASDAQ of recent. Is that telling us anything? Is it worth dipping the toe in? I don't doubt that this could be a bottoming pattern that needs to still play out. But if we look at the daily chart on this, we're building a base, right? This is a sloppy base. But then again, it's crypto. You're not going to typically have a well built out base to read from. There's a lot of ambiguity that comes with the tea leaves in this stuff, right? I've only been right on the movements in this from a broad market perspective because I choose to look at almost exclusively the higher time frames on this. It's almost like you need to look at daily and weekly before you drill down into anything else. But it's no surprise why it's wound up here from where it was. None of these basing patterns, albeit sideways trade, actually look decent enough to purchase for a breakout, nor does this. right? This has established a floor because of the huge vol that came in here. This is a couple or a group of big players that are in defending an area. Will this give out? The answer to that question could make you a ton of money. I don't know. But there is tea leaves to be read here in that this was being defended by a big group of question marks, right? Big vol compared to normal. Somebody stepping in here with big you-know-whats to protect this zone. For now, it holds. Oftentimes where price finishes after this big support by a group of question mark, right? We don't know. It'll serve as the floor for a period of time. Still don't think that if we start creeping down into this 26 area, I'm pretty sure these hold on for dear lifers are going to become big wimps and bail. And that has been the mantra all the way down. Bad patterns galore since the top, right? Here was a capitulation. Big money came in. What happened, right? Came against this level, based out, but still didn't have any solid patterns. This was beginning to look potentially like a breakout, but it wasn't being followed by volume. See that? But interesting to note that the bottom of this huge move kind of contained any further price decline until you could see how the gradual slow coming in, right? You know, everybody that bought here was defending or whatever the case may be. Just like, shit, they're coming down to get us, and then boom, vol goes up, blasting through a zone. In market profile land, a lot of these moves are just, you know, they're extended, so you have more basic period of times. You know, a lot of people would say, well, I'm looking for a breakout higher. I see a whole bunch of doji candles forming on this daily chart. You know, maybe we're going to break higher. You know, but these dojis, which is indecision, was just followed by more selling. See that? This is where they begin to give up the ghost. There's a lot you could take from this chart. Again, you could flip this upside down and look at the same thing, how it plays out. Not something I want to be buying. At some point, we're going to reach bottom. I have no idea where it is. Could be at 20,000. Could be right here. It could be back to where it was in that 5 to 11 area, which would be everybody. And at that point, God knows how long it's going to take for this to be back in the news. Because you notice all the crypto news is just absolutely dried up, right? So, and that leaves me with my last point. You guys just don't get caught up in a mania. I know I've talked way too much on this, but I see it every day. People just get caught up in the mania, right? All those people that thought Tesla was a purchase at 1100, take a look at the stock now, right? It's a great example of mania, trying to get yourselves caught. With that being said, our shortened version of the weekend software strategy session with Steve Errol has come to an end with a tear in my eye, because I love my subscribers so much that I hope they stay Auvorian subscribers forever, right? And with that sappy ending, I wish everybody a great holiday. I'm already thinking holiday. I wish everybody a great weekend.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.